Hello and good morning. My name is Brandon Godbolt. I am here to provide information with regards to banking. A lot of times when it comes to businesses, you'll be looking for funding or eventually you're going to need a bank for any task with regards to financing. That could also be how you handle your banking for your deposits, all the way up to how you pay your vendors and your customers, how they pay you. There are different solutions and reasons why a business will go and need to incorporate with a bank in order to get transactions done to help their businesses grow. What I am here to do is simply to provide information based off some of the information that I've learned over the years. Once again, if you've seen my videos before, I've said it, but I'll say it again. I've been in banking for over 10 years. I've worked for community, regional, as well as large cap banks. And I am currently a assistant vice president, business relationship manager, and in lending, commercial lending. So a lot of the things that I'm going to be here to provide you with is going to be some of my personal knowledge with regards to business banking, commercial lending, things that a business will need to know in order to take their business to the next level. So, for today's topic, I wanted to talk about SBA lending. That would be Small Business Administration lending. And what they do is they assist some businesses who are ready for lending. They need lending, but they may not have all of the boxes checked for what a bank looks for with regards to a conventional loan. A bank will look at, and I may have told you this in my previous videos, cash flow of the business. So that's the cash flow that comes from the operation of your activities in your business. So whatever you're selling, how much of that is your overhead, how much of that becomes your profit. So cash flow, they look at the collateral that you're using to represent what you're willing to give up in order to get the lending or financing from a bank, and the net worth of the professional. So the owners of the company, your personal net worth. As an example, when it comes to personal net worth and your personal financial statement, you can imagine that if you own a car, okay, and the car is worth $10,000, but then you have a loan on that car for $5,000, okay, you would have a positive $5,000 net worth because of that transition there. And that goes with homes and real estate too. So if you have $1 million home and you have a $500,000 loan on it, and the home that you own appraises for $1 million, you would then have a $500,000 net worth. So they check to see what the net worth is, to see if there are any other sources of collateral, just in case your loan goes south, that they can receive financing or receive in return to make their loan whole that they gave out to you. So back to SBA. So what SBA does is that they will actually get involved to assist in getting your loan approved if you can't get it approved conventionally. Sometimes what will happen is that maybe you have 2 of the 3 items that would make you able to get a loan through a bank. Well, a conventional loan, you're going to get declined, most likely. That's not a guarantee, but there's a good chance you're going to get declined if you, say, have poor cash flow, but you have collateral and you have a strong net worth, or any vice versa you want to look at there. What SBA comes in and does is that they will secure your loan, okay, up to a certain point. What they generally will tell the bank is that what we'll do is we'll come in with 40% equity on this loan. So they will secure 40%, which means that the bank, if your loan goes south, the bank would potentially get at least 40% of their cash back or their money back on a defaulted loan. If you want to imagine it how a bank sees a loan, you always will put cash in on a conventional loan. You'll put something in. You have to have skin in the game. So generally, say that the bank's going to give you a loan for 80% of what you're looking for financing for. They want you to put 20% down. Okay, SBA will come in and say, hold on, how about this? Let's put 40% in, you keep 50%, and we want the customer to pay 10%. So it makes it easier on you with your down payment. Then SBA comes in for 40%. And then the bank feels better because instead of them covering 80%, they're only covering 50%. So it's a good way for you, especially if you're new to a business. to look into lending for yourself. And most banks will do SBA lending. So they usually have a relationship with a local organization that specifically does SBA lending. And you can request that they take a look at a loan that way. Or your loan officer, the person you meet with, may recommend it. Now, one thing to consider, SBA does have more lenient terms that they generally can provide for your lending option. The other item is that generally with SBA, it varies on what you're trying to do. And another item is just because it's SBA and the Small Business Administration does not mean that you, if you're an experienced business and you've been around for several years, that you, in fact, cannot apply for a loan. You also can acquire SBA lending. Generally, one of the items with SBA is that they don't generally do investment properties. Okay, so they don't do investment lending generally. And that you're capped at $5 million in total liabilities out to SBA lending loans. So that gives you a lot of different excuses or items that you can take a look at. There's two different forms that you can look at as well. Generally, the most popular items or products that SBA offers would be the SBA 7A loan, as well as the SBA 504 loan. The 7A loan is what's more equipped for equipment purchases. You'll see a lot of practice financing with that one. So a doctor or an attorney wants to buy a book of an experienced and retiring doctor or attorney. Generally, they can use SBA 7A lending for that. When it comes to the SBA 504 loan, generally you'll see that more used to purchase real estate. So that is more of a real estate purchase tool as well. Both of them come with 10% down options. There is one that has a 15% option. You do end up giving a little bit more collateral in an SBA loan, so don't be surprised if they're asking you for personal assets. So if you own 6 homes and your business, you want to get your business a $1 million loan or $500,000 loan or lower, they may ask you to put up some of the homes that you have as investment properties up as a form of collateral. A lot of times on the commercial lending side, banks don't generally like to take your residential real estate as collateral. They prefer for it to be more commercial properties. And you can thank 2007 through 2009 for that. But that's just the way that the game goes. In general, that's just some information I have for you. Hopefully that's helpful. If you could do me a favor, if you can like the video if you thought it had value, and please feel free to subscribe. The more the merrier. And please, if you want to give me ideas for other topics that you have questions on that I can assist with, by all means let me know. This is Brandon, over and out.